Hello, everyone, and welcome to the March edition of Market Compass. In today's episode, we'll discuss a theme that we had highlighted in our annual outlook, the broadening of market leadership. Now, we know that stock market returns in 2023 were very narrow, led primarily by mega-cap technology and a handful of stocks affectionately now known as that Magnificent Seven. So today, nearly 3 months into 2024, where do we stand? Now, markets have certainly moved higher, with the S&P 500 up over 8% this year as of mid-March, but has market leadership expanded beyond that Magnificent Seven? And if so, what are the conditions we need to see in place to see further broadening of leadership? We'll go through this and more in this episode. So in 2023, we know that stock markets were led by a pretty narrow group of stocks and sectors, primarily in that mega-cap technology space, and driven by that growing enthusiasm around artificial intelligence and generative AI broadly. However, this year, we are seeing overall a broader group of sectors and asset classes that are outperforming. Let's take a look first at the S&P 500 sector returns. Now, last year, if you recall, sector returns were led by 3 sectors: technology, communication services, and consumer discretionary, all of which were up by over 40% for the year. Now, these are also the growth sectors of the market that house all of large cap technology and the Magnificent Seven names as well. So what are we seeing this year? Indeed, we are seeing broader sector leadership. Areas like financials, energy, industrials, and healthcare are all up over 6% thus far. And similarly, if we look at asset class performance more broadly, we see that while technology parts of the market are continuing to lead in 2024, there is some notable catch-up in the broader S&P Equal Weight Index, the high-quality S&P dividend payers, as well as parts of international markets. And although bond markets remain slightly negative this year, in our view, we could see this asset class perform better if interest rates move lower later this year. So what are the conditions in place that we would need to see for market leadership to broaden? First, we would expect to see the Federal Reserve and central banks around the globe to embark on a rate-cutting cycle this year. Now, the Federal Reserve has told us that it is getting closer to seeing the evidence it needs to start those rate cuts in 2024. We do believe that around 3 rate cuts are likely later this year, perhaps starting in the June or July timeframe. Now, this is largely because we see inflation continuing to moderate in the months ahead, albeit not in a straight line lower, but driven by ongoing moderation in the shelter and rent components of the inflation basket and some softening in services inflation. Now, keep in mind that as interest rates move lower, stock market valuations historically have more scope to expand, which we think is an important driver for better performance, especially outside of technology. Next, we believe earnings growth should materialize this year across many sectors in 2024. Again, last year S&P earnings growth was modest, up about 1% annually, and the biggest drivers were growth sectors, including communication services and consumer discretionary. Now this year, we're seeing S&P 500 earnings growth in the 5 to 10% range, driven by a broader group of sectors. Areas like healthcare, financials, industrials, even utilities are expected to contribute to growth alongside technology and growth sectors. So broadening in earnings growth, in our view, is also a driver for a broadening of market leadership. And finally, while the economy may soften a bit, we expect economic growth to remain positive and perhaps even re-accelerate in the back half of the year. The U.S. economy has been quite resilient in the face of rising interest rates. In fact, the average annualized growth in 2023 was about 3.1%. That's well above trend growth rates of 1.5% to 2%. However, this year we would expect to see some softening in economic growth, still positive, perhaps below recent levels. Now, this comes as consumer spending and the labor market may moderate as well. However, as we head towards the back half of the year, if inflation eases and the Fed begins rate cuts, we could see a re-acceleration in growth as well. Now, this is a backdrop which we believe favors a broadening of leadership, particularly in areas like cyclical sectors and mid and small cap stocks. Now, overall, equity markets have held up nicely thus far in 2024, driven by a broader set of stocks and sectors. However, like in any given year, we would expect bouts of volatility to emerge. In fact, 2 to 3 pullbacks in the 5 to 10% range are the norm historically. Nonetheless, we would view market volatility as an opportunity for investors to add quality investments to portfolios, as well as to think about diversifying portfolios for a potential broadening of market leadership. Now, we believe growth and technology investments should be complemented with cyclical and value-style investments, as well as mid-cap stocks and investment-grade bonds, all of which we believe have the potential to play some catch-up in the year ahead. Now, you can head to edwardjones.com for more insights and market commentary, and you can always reach out to your financial advisor who can help you tailor a portfolio that will put you on this path to meet or even exceed your unique financial goals. So with that, I thank you, and we'll see you right back here for the April Market Compass.